Hi, my name is Brandon Hui. I'm the CEO of Groveland Financial Services Limited. We are an insurance brokerage firm in Hong Kong and a member of the Professional Insurance Brokers Association. The purpose of this video, as you can see, Insurance 101, is really just a quick snapshot of what you need to know about insurance and living in Hong Kong. And in terms of the audience, I have a lot of friends and also clients ask me, hey Brandon, can you just quickly let me know what I need to know about insurance here in Hong Kong? A lot of them are just married, a lot of them just had their first kid. And so although a lot of the people asking about this Insurance 101 is age 30 to 40, that's obviously the primary demographic that asks about this, but this Insurance 101 is also quite relevant for those earlier on in their career, in their 20s. It's a great, people should definitely know this in their 20s, in their early part of the career. Some people even in their 40s and 50s, this could be useful for, or as a little refresher as well, okay? So really this Insurance 101 really covers both the investment side as well as the insurance side. As Groveland, as an insurance brokerage firm, we really have four product categories. That's life insurance, medical insurance, general insurance, and the investment side. So we're really going to wrap all these together, okay? So why don't we just get started, okay? So when I look at financial planning, really I look at an XY axis here, okay? Let's just say here, okay? Now the upside, which is what most people think about when people talk about financial planning, is called investment management. Okay, so that's really what is about, working, saving money, building your nest egg, retiring until X. Unfortunately, everybody does pass away, but up here is, let's just say, retirement. Okay, so on the investment side, I won't really spend too much time talking about the investment side because we're really going to spend more time talking about the bottom side here. But here, obviously, people have cash, people have mutual funds, people have what? Also real estate. People, also in theory, also invest in, there's wine, coins. Another product on our investment platform is also land banking products. Okay, and of course, there's also direct equities, aka stocks, also bonds. Okay, so obviously there's many things that you can use here to invest, save, in order to have enough assets to retire. Okay, now that's really all I'm going to say about the investment side. What most people are here to listen about is the bottom half, and that's really what I call risk management. Okay. And I think all too often people do focus on the upside and really trying to invest, but people should equally spend time thinking about what could burden them, what kind of risks that could affect their lives, okay? And so the first element of risk that I want to talk about here is what we call medical insurance. So I'll put that right over here. Okay, and I'm going to draw, let's just say, right here, okay. Okay, so this red here represents how much money that you could in theory be out of pocket if you were to be afflicted with any kind of a medical risk, okay? And so for medical insurance, whether you're 1 year old or just starting your career at 22 years old, retiring at 65, or even in your later years at 80, there's always a chance that you could be hurt, break an arm, break a leg, get appendicitis, whatever, hey, even possibly cancer. But at any point in time, there's this risk of a medical risk, okay? And you being burdened by a medical cost, okay? And so now one thing I'll highlight is obviously in Hong Kong, there's a public health system as well as a private health system, okay? And yes, the government hospitals are quite cheap, okay? But yet, we also have to remember that the wait times are longer, and also possibly some of the better doctors, in theory, could also be in the private hospitals as well, okay? But when we're looking at private hospitals are quite expensive in Hong Kong. They're amongst the top two, up there with the US in terms of costs relating to medical costs. So it's definitely, if you do want to consider private hospitals, a medical insurance plan is certainly something to consider, okay? Now, when we're talking about medical insurance, I want to highlight that, yes, there are some people that do have company group medical plans. Yes, they do have possibly a private level medical insurance through the company. However, it's also important to know that when you are out of work, though, let's just say in this segment right here, whether it's you decide to take some time off to take care of your kids, or some people do get laid off, then during these gaps that you don't have medical insurance, okay? When you retire and onwards, okay, well, hey, a lot of companies won't hire you until 99, so during that time you don't have medical insurance. So there are these gaps that you do have to consider, that group medical won't be adequate, okay? So from a medical insurance perspective, there are a couple things you can consider, okay? So the first thing that I'll write here is, we'll call it a basic plan, okay? So one option is a basic plan. Number two is top up, okay? So basic plan, what we really mean is a medical plan that covers you from the first dollar up to whatever that limit is. Let's just say $1 million USD, okay? So there is no, what we call deductible, okay? Top-up plan actually has a deductible, essentially a plan that covers you with a deductible, let's just say $5,000. So you as a policyholder have to pay the first $5,000, but then you're covered from $5,000 to that $1 million. Okay, so these are sort of two options that people do have. Now, some people that have a group medical plan say, hey, you know what? I'm going to choose a top-up plan because I have a nice mediocre middle way of the road plan that covers me to let's just say pretty maybe up to 100,000 Hong Kong dollars. But I'm really worried about those things that will get me up to 1 mil, 2 mil or beyond. So I'm going to buy a top-up plan that has that's deductible of 50,000, covers me to $1 million. Okay, that makes sense. Okay. But also do keep in mind that when you do have this top-up plan and you lose your group medical, then you will certainly be out of pocket that entire deductible. And when you lose your group medical at retirement, let's say, then your top-up plan, you'll also have to be out of pocket that deductible amount as well. Okay. Now, if you do have a basic plan, if you do choose to have a basic plan in conjunction with your existing group medical plan, then some people will say, hey, Brandon, well, sounds like it's overlapping because I'm covered from 0 to 50,000 for my group medical plan, but I'm also covered from 0 to $1 million with my basic plan. So what gives, Brandon? Well, you're right, there is overlap, but however, during those times where you don't have the group medical plan, then the people are quite happy. I guess they're quite happy that they chose that basic plan to begin with, so they can be covered for the full amount here, as well as for the full amount through retirement, okay? Now, people then ask me, Brandon, well, fine, pros and cons of both, but between basic plan and top-up plan, maybe what would you choose? Well, I think a top-up plan could be reasonable because, hopefully by the time you retire, you will have enough nest egg, enough cash that you could pay out of pocket that deductible amount. And by having that top-up plan with a deductible, premiums are lower because you have a deductible, and the premiums are a little more sustainable as you get older from 65 onwards. And of course, insurance premiums for medical insurance is based on age, so the premiums here in your retirement years are going to be more expensive as well. So again, there's pros and cons, but these are the main things that you probably want to think about for medical insurance. Of course, medical insurance, there's a lot to choose from. I won't go into it here, but obviously there's inpatient, there's outpatient, meaning GP, chiro, physio, Chinese herbalist, x-rays. There's also maternity coverage, there's dental, medical evacuation. So you can really pick and choose what you want for your medical insurance plan, but the core medical insurance plan is always the inpatient plan, meaning the emergency inpatient, having to go to the hospital, okay? So that's really the section about medical insurance, okay? Okay, so the next element of insurance that I want to talk about here is critical illness, okay? So I'll write that here. And in terms of the at-risk amount, I'm going to draw this right here. Okay, so what this really shows is that whether you're 5 years old, 12 years old, 65 years old, or 85 years old, you're susceptible of getting a critical illness at any stage of your life. And if you don't have enough assets, or more particularly liquid assets, to pay for this critical illness cost, then you might not be able to access the medical attention that you want. Okay. Now, to elaborate more about critical illness, what we're really talking about is a list of 50 or 60 serious illnesses, and there's a long list, but the most important three are really cancer, heart disease, and stroke. I mean, these three together, you're already at 94% of critical illnesses claimed. And of course, the biggest, though, is cancer. Okay? And so the first question people ask me is, fine, well, for critical illness, how much coverage do I need, Brandon? Well, for cancer specifically, chemotherapy in Hong Kong obviously has a varying range of costs, but the benchmark dollar value that we do use is $600,000. And this dollar value I've also confirmed with a friend that recently had chemotherapy, but the initial cost for chemotherapy is $600,000. But it's also important to understand that there's also additional costs of having cancer as well. And that's ongoing medication, okay, ongoing nursing, as well as even renovating your apartment to be wheelchair accessible, or flying in your relative into Hong Kong to take care of you and your family, okay? But the biggest cost is loss of income, okay? If you're unable to work for 2 or 3 years, then that's a lot of money to give up to maintain not only your lifestyle, but also the lifestyle of your wife as well as kids. And so that's why people do need to consider not just the chemotherapy amount, but also these other costs as well. Okay. Now, financial planners do say to budget around 3 to 5 times of annual income as the amount you need for critical illness. Now, for those that can't afford that, well, no problem. You can also even think about a smaller amount, 1 or 2 times of annual income, and possibly increase your critical illness coverage when your budget improves. Okay. But I think also, how do you buy critical illness? Well, there's actually 2 product schemes, product types where you can buy critical illness. You can buy in form of term critical illness or whole life. Okay, so term critical illness or whole life, and I will elaborate on this a little later on when I'm talking about the next section, the next risk component, which is life insurance. Okay. Okay, so the next element of insurance that we want to talk about here is life insurance. Okay, so I'll write life here. And in terms of what this red risk profile looks like, well, life insurance doesn't look like medical insurance here or critical illness insurance. It looks like this. Okay, so why does it look like this? Well, let me explain. And it really links back to the question, who needs life insurance? Okay, and so the question we always ask is, who is financially burdened if one of these risks was to happen? So if somebody was to pass away, if somebody was to die, who is financially burdened? if we talk about somebody here at age, let's just say age 18, okay? Just finished high school, just got into university. If he was to pass away, who's financially burdened, okay? Well, let's think about it with logic. Well, let's just assume this person doesn't have any parents that are financially dependent on him. Let's assume he also doesn't have children at that age that are financially dependent on him. And he doesn't have a spouse that is dependent on him either. So in this scenario, who's financially burdened? Well, actually nobody. Yes, relatives will be sad, but from a financial perspective, nobody's financially burdened. There may be some funeral costs, but no significant financial burden. Okay, so in this scenario, this 18-year-old doesn't need life insurance. Let's just say later on he gets married, okay? And we do have a lot of clients that say, hey, Brandon, I just got married and therefore I need life insurance. Well, no, you don't necessarily need life insurance because let's just say in this example, his spouse also has a job, is financially dependent, okay? Again, no parents depending on him, no children depending on him. And if he was to pass away, is his spouse going to be okay? Well, actually, she's got a great job. She's financially doing okay. And although she'll be very sad, she's not financially burdened either. So in this scenario, he doesn't need life insurance either, okay? So what is this point here where you start seeing a huge financial burden, a huge liability? Well, this is a couple things. One of the things, I'll just write here, B for baby, okay? So if they, after getting married, they have a child, well, actually, that's really the point that triggers the most, one of the milestones that triggers the most liability. And so if he was to pass away, within that first year of being a daddy, well, that liability is quite big, okay? You have to really consider 18 years of education through kindergarten, through elementary school to high school, all the extracurricular activities, maybe even some vacations, as well as any additional costs. Yes, you also need to consider university. How much does Harvard or other universities cost? Not just now, but we're talking 18 years down the road. So there's certainly education inflation as well. So that dollar value is quite big. And you do really need to sit down and to think about how much coverage you need for that child. And if your spouse isn't working at the time, well, you also need to allocate a face amount to take care of her as well. Even though she can eventually get back into the workforce, well, hey, she might need 2 or 3 years to take care of the child or even get some additional training to get back into the workforce. So that's something to consider. Another milestone that could trigger buying life insurance, I'll write here, mortgage, okay? So even though you don't have a child and you have a mortgage between a married couple, it might be a consideration to buy life insurance because, this example here, he doesn't want to leave his wife with a massive mortgage amount that she's unable to pay off after he passes away. So some people do buy a face amount for the mortgage amount, or maybe even a little bit more to give the spouse a little bit extra spending cash as well. Okay, so these are certain triggers to buy life insurance, and the reason why it's shaped like a triangle is because, again, the burden is the greatest when you just have a baby. Maybe later on at age 18, okay, your child's 18, he has another 4 years left before he becomes financially stable, so your liability amount is less. And eventually, when there's no liability amount, that's really when he's possibly entered the workforce, he's joined that law firm, he's financially dependent, and you are, you have peace of mind that you passing away won't jeopardize his quality of life going forward as well. Okay. Now that's one triangle, assuming that's one mortgage or one baby. But if you have a second baby, well, you know what? I'm going to overlap here another triangle that you have to consider. Okay. If you have another child or another mortgage, great. You have to consider another triangle as well. So people do buy life insurance in stages as their life circumstances change. As you have another child, as you have another mortgage, But this is things to consider when you're thinking about how much coverage you need. Okay. Now, in terms of life insurance, similar to critical illness, you can buy it in two ways, two formats. The first way is to buy it in terms of term, and the other way is whole life. Okay. So here is life insurance, here's critical illness, here's medical insurance, okay? So let me explain to you what term life is, okay? Term life is a life insurance policy that really renews each year, okay? It's annually renewable, okay? And it's a cheap form of getting life insurance. And the way it works is, let's just say you're wanting to buy term life insurance. I'm the insurance company. I'm gonna say, well, you're 30 years old, you're healthy, your BMI is great, you want to buy $1 million of coverage? No problem. I will cover you for the next 12 months, 1 year period, for a cheap premium of $500 Hong Kong dollars. Okay. And next year, though, you can renew it, but you're still healthy, your BMI is great, but when you're older. So I'm going to increase the premiums from $500 to $505. Okay. Next year, maybe it increases to $515. Next year, $530. Next year, $570. Next year, $1,000. Whatever it is, but as you can see, the premiums do escalate exponentially. And although they are cheap at the beginning, later on in life, when you're 55, 60, 65, 70, the premiums start to be quite considerable. And generally at around that age category, that's when people generally cut their term life policy, whether because it's too expensive or because they don't need any life insurance anymore. Okay. Now, term life insurance is cheap, but there's no savings component. Okay. So when you cut the policy later on, don't expect any money back. Okay, that's one thing to remember about term life insurance policies. Term policies also give you the flexibility of terminating the policy anytime you want. You can cut the policy after year 3, year 10, year 20, whenever you deem you don't need the coverage anymore. Okay, so that's term. And then there's whole life insurance. Okay, whole life insurance is essentially more expensive, but you are guaranteed the face amount. Okay, that sounds more attractive. So that $1 million face amount you are guaranteed to get. Okay, and in addition to that, this policy also has a dividend account as well that accumulates declared dividends in this policy, and it's quite significant as well. So let's just say, assuming looking at the numbers at age 100, your face amount is $1 million, but that dividend account could actually be $2 to $3 million as well, depending on what type of whole life policy you get. Now, because you're guaranteed that face amount, the premiums on the whole life policy are more expensive. Okay, and this policy actually looks a little more like an investment policy. It's really a combination of insurance and savings together. And it really looks more like a mortgage, actually. And you really pay it off over 20 years, but you can also pay it off over 10 years, or if you have enough money, you can actually pay that off all in day one as well. Okay. And so buying term versus whole life, that's really the big dilemma for insurance. For term and whole life, there's pros and cons. And so it makes sense to talk to a broker or one of our Groveland brokers to figure out what combination makes sense for yourself. Now, life insurance, the last thing I'm going to say is that what people do ask a lot, well, life insurance I'm going to buy in Hong Kong, but I might move back to London, might move back to Canada, I might move back to the US. Am I still covered? The answer is yes. Life insurance policies are generally global coverage, and if you were to move back to into your home country or to another country, the policy still remains a Hong Kong policy, but it will still be effective as you move to other places in the world. Okay, so I guess we've talked about medical insurance, critical illness, as well as life that are main elements when you consider the risk management side. One last thing I did want to mention down here is disability. Now, I'm not going to talk too much about this, but disability really means if you are unable to work and by definition disabled, then this insurance policy will pay you either a lump sum or a stream of income during your working years, sometimes until retirement. So the risk profile for disability is also similar to life insurance. So I'll just draw another triangle down here just to indicate that. Okay, and a lot of times the disability policies can be tacked onto existing life insurance policies or critical illness policies as well. Okay, but these are really the main four elements that I really want to highlight here when we're looking at the downside risk management. Okay, and now we talked about investment management, risk management, these elements. One other area that I want to talk about just quickly to wrap up here is general insurance. Okay, so general insurance in theory is actually the non-life and health insurance policies. So this is car insurance, pet insurance, travel, home, domestic helper insurance, which is mandatory, as well as landlord, as well as fire. Okay, I mean, there's actually many other elements of general insurance. So it makes sense for you to shop around with a broker to find a policy with a better value, better premium, better coverage. And especially for fire insurance, a lot of times when you do go get a mortgage from a bank, they do require you to get fire insurance. Sometimes the bank's prices are quite high, and so we do find that when you do shop around for fire insurance quotations through a broker, you automatically save 30, sometimes 40% just by shopping around. Okay, so that's that, the Insurance 101 snapshot. If you have any questions about any of these elements, feel free to contact myself or one of our Groveland representatives. I believe our information will be highlighted at the very end of the video. Thanks a lot for watching. If you like this video, click on the like button. We're going to actually have a lot more of these videos moving forward, so you can click on the subscribe button. If you have any comments, questions, or have a topic that you want me to go through, feel free to leave that comment in the comment section as well. You can check out our website and send us an email if you have any questions. Thanks a lot.